Hello, traders. It's 8:10 a.m. Chicago time on Tuesday, the 13th of November, 2018. Sorry about the delay this morning. Excuse me. Just as I was getting ready to get on, I got the wonderful blue screen. It seems like there's something going on with my video cards driver. Usually very, very stable workstation, but this morning it just did not want to cooperate. Probably some update I didn't know about. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk is mixed. The leader this morning is the British pound, up 0.89%, 114 pips. Followed by the Russell 7.4 points, or half a percent, and the Nasdaq. Overall, the S&P is also up. The laggard today is crude oil. Crude oil trading at 58.65, down $1.26 or 2.1%. You might want to take a look at the chart for natural gas. That thing's all over the place these days. Gold, the bonds, and the yen are all below, as well as the bund. So allocation clearly is to risk on, but only slightly. Crude fell yesterday, just like we talked about at the end of the segment yesterday. I discussed the strong potential, the probability that any push-up by crude is likely to be sold. Crude's enjoying its 12th day, I think, of rotating down. So it's quite a streak. I think the longest since inception, 1983, on that contract. That's where we stand in the overall picture and sentiment. In terms of what we have ahead of us today, all we have is the federal budget for October, expected at negative $98 billion. Prior is $119 billion. That comes out at 2 p.m. Eastern. That's it. That's the only thing that's on deck today. There are some Fed speakers at 10, and ECB speaker at 2, and Fed speaker at 2:20. Pay attention to your news feed as usual. This is a news-driven environment, as is everything. Everything's based on a news cycle these days. So there's a little bit to cover here. The yesterday, well, let's look at what we expected, okay? Let's keep our routine despite the interruptions. So yesterday, the primary scenario was expected to be an open auction that pushes up into 88, 27.88, and then rotates down. A strong potential for an inside day. The secondary scenario is an open test drive down that pushes us beyond 56.50. I didn't expect it to go down as far as the MC point of control, 27.50. 27.50 is big. It is the point of control, the most traded price area of 2018. It's also the MC point of control since the gap up. So yesterday we closed the gap, but we also had a gap prior to that. Let me show you what that looks like. So we have a gap on the 31st here. So if I extend, first let's extend our top profile. So you can see the point of control right here, the black line. That is the most traded price, 27.50. And this micro composite, let's scrunch it down to see where the heck it starts from. It starts from the beginning of the year, basically, well, at the end of January. It is the high that we put in, the price adjusted high of 28.89 that we put in at the beginning of the year, all the way through the February sell-off, all the way through the May through October or late September rally, and includes October selling, and that's the most the most traded price of the year, 27.50. Now, in addition to that, when I extend this profile, which is the gap up on the 31st, when I extend that profile up, the point of control moves for this profile. Here, I'll turn on the, see that, 27.50 on the nose. Also, so there's an overlap here. And you can see this is just a great example of the market kind of rotating and trading logically. Since October 31st, the most traded price is also right on top of the one for the year. So that's not a coincidence. It makes sense. Yesterday's push, and by the way, yesterday's push took back pretty much the rally that we set off on since we became initiative on the 31st. Since we gapped up and ran up to 28.1750. Kind of interesting that we never tackled the 28.20, stopped short at 17.50 before we turned back. And now yesterday, closed 50 points lower, 50 plus points lower. Yesterday's range, 55 and a quarter points. The volume is 1.64 million contracts, which is higher than the mode. The mode per day, here's the mode. Here's what we expect, or the most common volume for the day is 1.19 million going back to July 20th, 2015. Those are the number of days. That gives us 837 trading days of samples. And the mode of the range right here is 13. And we would consider anything from 7 to 24 as normal. That's called the value area. So that's what these profiles are about. This profile here plots volume. This profile here plots what we would consider to be normal or expected range. And yesterday exceeded that. So there's a fair amount of what this is saying is there's a fair amount of participation on the sell side, and it looks like we are pulling back. Now what we have here is almost a perfect potential head and shoulders, inverted head and shoulders here, depending on how we fill in the right shoulder. We do have a gap below us at 2,700, 26.9950, and it just looks like an inverted head and shoulder. If you're a believer in patterns, I'm not really, but I do look for the pivot points in patterns because there might be some confluence there by others. The overnight session, what does it show us? The overnight session is essentially saying there was a tremendous amount of activity. We continued the sell-off, which was expected yesterday. We finished with a point of control below. Sorry, I have to clear my voice. We finished with a point of control below the IB. And overall, we extended the range down, and we were... Yesterday was kind of debatable on whether or not it's a trend day. I don't believe it was. There was quite a bit of balance here from the key low volume nodes at 27.50 and 27.30. And the overnight extended the low by a little bit and then started to rise up. This morning, the European session started at about here, and we've pushed up and we've put in basically a double top at the high. And what we have this morning is almost the inverse of yesterday's profile. So yesterday's profile kind of looks like, voila, a B shape versus a P shape. So it looks kind of bullish. We're above the mid. We're around VWAP in the overnight session. And we have a clear line of the sand here at 27.33 to 35. And we'll see how that gets treated this morning. So this is what we've got. As far as what we're expecting for today, I'm going to say a few words about, if I can fit them in here, maybe 3-4 minutes about discipline in trading. Very important topic. Somebody asked about it this morning, and I'm going to cover it since it is Mindset November at Convergent Trading. These are the topics that we're covering currently. So here we are. We're above yesterday's close by just a little bit. We're above the MC point of control, and we're opening in the value area of yesterday. The expectation is for more chop. It is in the value area. I expect that we are likely to try to tackle this lower value at 26.27, the MC point of control. I'm looking for an impulse higher. I'm looking for this to push into 27.50, consolidate in the 27.50 area, and then hold steady. So I expect this range to extend down. I expect a lower high, lower low. We're one time framing down. I don't see this why this would change at the moment. There are no releases expected today that may impact the markets. The secondary scenario is we hold this 34-33 area, the neckline overnight. We push into 27.50, and then we impulse down and push through 27.22 from yesterday, and we start working our way further down into 27.05 and 2700. The target would be down here if we get the range, but it's tough to predict the range these days, but it could continue to push down into the 2700, 2695 area. I prefer the short side, just like those who are in Convergent yesterday. I said just keep your mouse off the buy button, keep your clicker off the buy button. Look for shorts, and the shorts were difficult to come by in the rundown. It just missed. I missed this whole push down until we got a small pullback to lean against. But that's basically what we're looking at, and that's scenario 2. Okay, so scenario 1 is looking for a push down and then an attempt higher to basically continue this P-shaped profile from the overnight session, which shows some short covering. And then scenario 2 is a push up early and then an impulse down out of range to continue to move down to 2700, 2695. That's the summary of it. The thing I wanted to say about discipline is that there have been books written about it, the Disciplined Trader and all these psychology books about discipline. Here's the thing that I've learned with discipline. This is my own experience for myself and for my traders and those who I've worked with. Discipline is a nice thing to have, and it's a necessary thing to apply in trading. However, you can go home and beat yourself every day about not being disciplined because you're not able to stick to your plan. So discipline is kind of pointless unless you have a plan that you're measuring your performance against. And really our job here is to measure our performance against execution, not results. I know that's counterintuitive because everywhere else, all other venues in life, we're measured by our performance. But really in trading, the performance is limited for us to how we execute our plan. We said we'll do something. How well did we do that? The outcome itself really is not in our hands. That's why luck has a bigger hand in trading as it does in poker than we'd like to believe. Luck has a tendency, has the aspect of not being able to control things. And as humans, we love to control things. So discipline really is about creating something that you can follow, right? And then unless you're measuring how your performance has been, there is no discipline. For example, I can tell myself, I've done 5-day water fasts and so on. Amazing experience. Love it. But if I'm doing it to lose weight, unless I have a plan for how I'm going to execute this water fast or how I'm going to lose weight, unless I'm tracking my weight loss and measuring how much of it is fat, how much of it is water, and how much of it is muscle, it's hard for me to pass up on, the big slice of pizza at a birthday party because I'm not measuring it. I can let it slip. But if I'm measuring how I'm doing things, then discipline becomes more important because you're seeing the result of your discipline. There has to be a feedback loop that reinforces whatever you're being disciplined about. So people who come in and say, "Oh, I have to be really disciplined in trading," but they don't have a plan coming in and they don't keep track of their performance, it's really difficult. You could be disciplined for a few days, a week, a couple weeks, but in the long run as a career, it's hard to do that. It's much easier to do it when you see the results, when you can measure the impact of your decisions and lack of discipline on the bottom line. That's what keeps you disciplined. So discipline is a motivational cycle, and it's a muscle. Discipline is a muscle. It gets tired. And the way to keep it going and to keep it refreshed is to feed back into it the reward you're getting for being disciplined. So trying to be disciplined without first having a plan. Second, tracking your performance. And performance can be tracked has to be tracked in two ways. One, a journal. And this journal basically states what the trade was, and you can track whatever you like. But the other part of tracking is a trade log that shows your performance metrics: percent win, percent loss, average size win, average size loss, expectancy, profit factor, R factor, all these things. And keeping that is what's likely to keep you in check. It's like, again, the analogy of losing weight. It's like keeping a food diary. Without keeping a food diary, how do you know you're not over-consuming calories and not creating a deficit to lose weight? So it's the same process. So talking about discipline and beating yourself up about discipline but not tracking it is just, you're kind of going in circles. That's all I have to say about that. Good luck. Market opens in a minute and a half. Take care.